Hi, you're watching BloombergQuint. We've had late evening developing news with regards to Lakshmi Vilas Bank, which has been put under a moratorium by the Reserve Bank of India. In effect, that limits the amount of withdrawals that depositors of Lakshmi Vilas Bank will be able to make in the coming next few weeks. But along with that news of moratorium, the RBI has also issued a draft scheme of amalgamation that proposes the amalgamation of Lakshmi Vilas Bank with DBS India. DBS India is a subsidiary of the Singapore-based DBS, which is a well-known foreign banking franchise, but it doesn't have extensive operations in India. So those are the main two headlines. There is a third subsidiary headline, which has to do with what happens to the equity of Lakshmi Vilas Bank as a consequence of this amalgamation. But you're going to have to wait for that fine print, because before that, I'm going to get to my colleague Vishwanath Nair to go through some of the key developments. And after that, I have joining me two experts on this matter, Ashvin Parekh and Amit Tandon. But Vishy, first to you, what do we know about the moratorium? How much money can depositors withdraw, and what are the other restrictions, if any?
Right. So, Menaka, as has happened in the past with the RBI moratorium, here also they've given a definitive timeline. They've said 30 days starting Tuesday, which is the 17th of November. So 30 days, 30 working days. And depositors of Lakshmi Vilas Bank can only withdraw up to 25,000. Now, this is irrespective of how many accounts they hold with the bank. If they have multiple deposits with the same bank, but they can still only withdraw up to 25,000 rupees. The Reserve Bank of India, of course, also has placed multiple restrictions on the way the bank can spend capital, on what it can buy. It can continue paying some of its creditors. It can continue paying dividend or the returns on government securities. But of course, for the rest of the businesses, it has put a complete stop for these 30 days. Within these 30 days, the RBI is intending to implement the scheme of amalgamation that you discussed earlier with DBS India. So once that is completed, then of course, Lakshmi Vilas Bank and DBS India become one entity, one merged entity. What it will be named, etc., is a different problem. But with respect to Lakshmi Vilas Bank as an entity, it would cease to exist, and this would become a merged entity with DBS India. As part of these proposed scheme of amalgamation, now this is only a draft at this point in time. The government has to approve it, and only after that will the amalgamation go through. But as the draft stands, all the shares and debentures, according to the draft, will stand delisted if they are currently listed. And they've also said that any of the share capital accounts, as well as any other equity accounts that the bank might be having, all of those will also stand written down fully. So, of course, this means a lot, as you said, for the equity shareholders of the bank. Apart from this, of course, within the 30 days, the RBI intends to complete this entire process so that the depositors aren't affected as much. The RBI pointed out that Lakshmi Vilas Bank has seen its financials see a complete downfall in the last 3 years. It has repeatedly reported the net losses. The bank has also been under the prompt corrective action framework of the Reserve Bank of India since September last year. So all of this comes into play. It has been in discussions with Clicks Capital for a potential investment proposal that has been going on for some time now. But since there was no concrete plan on the platter, the Reserve Bank of India is saying that we tried a bank-led mechanism, we tried a market-led mechanism, but since there was no concrete plan in place, the RBI had to step in the interest of depositors and enforce this moratorium.
All right, so we know this is a financially beleaguered bank for a long time now. We know that there were efforts to bring in strategic investors, but they did not fructify into anything concrete, as you've just pointed out. Hence, the RBI, we know there was boardroom drama that took place over the past several months, and Amit has written about it extensively on BloombergQuint. I'll get to that in just a bit. And so RBI thought it best at this point in time to put the bank under moratorium and eventually seek to amalgamate it with DBS. While it is under moratorium, you've pointed out the depositors can withdraw only 25,000 rupees in the course of the next 30 days cumulatively, is what I can understand. Or are these daily or weekly limits?
No, the RBI always gives you a full term limit. So whenever they say 25,000, that's the limit for those 30 days. Right. I think we've lost Menaka for a bit. But let me quickly come to this point. Firstly, to you, Mr. Tandon, since you've been writing so much about Lakshmi Vilas Bank, the bank, of course, has had its fair share of problems. Not only is the profitability issue, but there's also serious solvency issues with the bank. How do you view this? Is the RBI too late to step in? Should this have been done maybe 2 quarters ago?
Well, good evening. Clearly, when we wrote about it, our view was that the bank was, for all intents and purposes, insolvent. And therefore, the piece which was published in BloombergQuint called A Stitch in Time was focused on the fact that, RBI quickly needs to step in. If you've kind of looked at the developments over the past few years, every quarter or 6 months, there was a new buyer who was dangled in front of the regulators as well as in front of the other shareholders. And each time, the share price used to kind of inch up a little bit, kind of bringing in some more people into the fold. And that was something which was very clearly unsustainable. So when the piece was written, the idea was to say that, look, the bank is insolvent. RBI needs to have stepped in yesterday, because the consequences were, one, whatever they were for LBB, but there were also consequences for a number of the other private sector, South Indian private sector banks, which were all kind of on the edge. And therefore, to bring in or to, as a mark of just to ensure that RBI is on top of things, we felt that RBI should have been intervening on it a lot earlier rather than wait for events to unfold, which could have been fairly debilitating or the consequences to the market. Back to you. And back to Menaka now that
I'm so sorry. What can be done about this internet connectivity situation in this country? But nonetheless, I think the second point that I wanted to make with Vishy and then move on to our guests is the outcome of the merger with DBS and what that means for the financials of the merged entity. Vishy, if you could just run us through the basics, and then I'll move the conversation forward to both Mr. Parekh and to Amit.
Right. So as things stand with respect to Lakshmi Vilas Bank, of course, as we know, it has faced a serious financial troubles. The capital adequacy ratio for the bank is in negative at about 2.85. Tier 1 ratio at about negative 4.85. So obviously there are serious solvency problems. The gross NPA ratio is also quite high at about 24.5%. In comparison, you have DBS, which has a significantly smaller network, of course, only 35 odd branches in India, but its financial position is significantly better. As of June 30, as the Reserve Bank of India has declared, the gross NPAs were as low as 2.7% for DBS India, and net NPA was about 0.5%. The capital adequacy ratio is at about 15.99%, with common equity tier 1 significantly higher at about 12.84. Versus the regulatory requirement. So there is the whole aspect of a better, stronger bank as far as DBS India is concerned. And apart from this, the Reserve Bank of India has also said that the foreign bank will be bringing in, or the Indian subsidiary of the foreign bank will be bringing in about 2,500 crore as part of this entire amalgamation effort, even though it is very well capitalized. This will come in upfront so that it can help the credit growth of the merged entity. It can give that dry powder that the bank needs to grow out of the problems that it currently is in.
All right, Mr. Parekh, are you surprised with the marriage or the proposed marriage with DPS? Because as Vishy has pointed out, as yet, it is only a draft scheme of amalgamation. I don't think the suitor is likely to change, even if some of the terms and conditions were too. But, the choice of DBS, of all the banks in the country, the franchise that it has, the franchise that it doesn't have, and what that means.
Well, this is a very interesting development to my mind. We've seen in the past, and only in the recent past, mind you, a couple of NRIs getting a certain amount of acceptance from the regulator. I mean, one example we have, Fairfax getting into one of the banks, old private sector banks. So, I mean, this is a unique sort of example in its own ways. One is, of course, we recognize that DBIL is a 100% subsidiary, which means the whole concept of wholly owned subsidiaries, which was actually floated way back in 2008-9 period era. And then about 2014-15, we had some more guidelines coming out of it. First time, I'm getting an impression that the regulator is now prepared to explore the possibility of having foreign banks, if they are prepared to create 100% a wholly owned subsidiary to begin with, then the regulator is very open to really having them also acquire an Indian bank. I mean, this is of course through moratorium, but I would expect that then in the normal commercial basis also, RBI does come out with something interesting in this area, which really means, if you really analyze, that the capital in banking can also flow from foreign banks. That 5% rule of foreign banks owning an Indian bank may have to be perhaps re-examined in the context of this particular example. But this is a very interesting example. Instead of giving this bank away, and in fact, the way the conditions were, and Amit just pointed out, that they had practically run the bank for the last 3 years, in a very bad manner. So to that extent, I would say, very interesting example. First of its kind where the entire capital, perhaps, as I can read from whatever that's available at this point in time, and I may be corrected if I'm wrong, but from whatever is available is also going to get struck down. So it's a very unique example, first time, I would say in my 40 years of practice, I've seen something like this.
Mr. Parekh, what do you assume would be the reasons for why RBI picked DBS? Do you think it's because no other Indian private sector bank put its hand up? How would they have gone about the selection process or the figuring out of who is the right suitor?
See, let me just go back into the process that would have perhaps happened, which of course is not into public eye at this point in time. But RBI did give about 3 years, to the management to explore the possibility of finding out a suitor. And I'm sure, the management would have approached some of the private sector banks, some of the public sector banks also, they could have on their own approached. One doesn't know at this point in time. But after having exhausted that, and then after trying out with a few funds and a few other set of investments, and then they kept on taking those proposals to the regulator, I think the regulator must have thought about, and then rightly so. I totally subscribe to this particular approach, suggesting that let a foreign bank come in. A foreign bank was desirous of expanding in India, putting up a larger footprint. That's the way DBS had actually, when they set up the branch about 12 years ago, that is the intention the intent they had showed, in fact, in their application, which is, available in public domain at this point in time. So to that extent, I would say it's a very good first of its kind of an experiment, and it could work out very well to my mind.
Amit, the fact, and like we pointed out, I want to get 2 comments from you. The way the draft scheme of amalgamation is worded, it seems to suggest that all equity will be written down. The language is that the entire amount of the paid up share capital and reserves and surplus, including the balances in the share and securities premium account of the transferor bank, which is LBB, shall stand written off. And then it goes on to say that LBB shall cease to exist by operation of the scheme, that is when the amalgamation happens, and that its shares or debentures listed in any other stock exchange shall stand delisted without any further action required from the bank or from DBS India. Are you surprised at the writing down of equity completely down to 0? And B, it's effectively just giving the bank to DBS then. Have I understood that correctly?
You're absolutely right. But Menaka, before I answer that, let me kind of turn to the first question which you were discussing with Ashvin. And as Ashvin rightly points out, that DBS is one of the few, or one of the 2, if I'm not mistaken, wholly owned subsidiaries which operate. I think the other is Bank of Mauritius. DBS is the other one. But, there are a couple of interesting things to keep into account when how they may have decided on DBS. The first is that when DBS historically has actually looked at Global Trust Bank as well as an acquisition, because they've been keen to expand or have a more visible presence in the country, and they wanted to do it through a branch network. And I guess that's one of the ways you can kind of, they're a relatively new bank in India. They're about 15 years old, as against the Citi and Standard Chartered of the world, who've been here for about 100 years. So the only way to kind of play this market for them was to set up a wholly owned subsidiary and start expanding. The other interesting fact about their business, and which is why they make an interesting choice for RBI, is the fact that in other geographies too, they're a kind of an SME, MSME kind of focused bank. It's not that, unlike Citibank or the others, they're bringing in their global customers and servicing them in India. And therefore, when they are present in, let's say, in Indonesia or Hong Kong or Korea, also Taiwan, they've kind of always done it through an MSME. So they become kind of a local bank in a sense. So it makes, while the choice is surprising, and given the fact that there were murmurs about, it's Punjab National Bank, which might be asked to kind of step in at this stage, the fact that it's DBS means that suddenly there's a whole new world and a whole new set of regulations we might be looking at, as Ashwin rightly pointed out. Coming to the deal structure, I haven't looked at it in too much detail, but a couple of things. The bank was pretty much insolvent, as we wrote in our comment, which got published by BloombergQuint. And therefore, it's no surprise that the equity investors take a hit. They've taken a complete hit, because here I'm guessing that the RBI might have had one of its own objectives. One is to protect all the deposit holders, and therefore, if you are going to ensure that the deposit holders are made whole, then the bond holders, the equity holders are the ones who need to take a hit, and that is kind of consistent with, I think, what the philosophy is. And the second is, if they're speaking to DBS may not have rushed to get into a listed entity in India. It would have kind of complicated things for them, and therefore this is the best way to kind of achieve that objective. Of course, small shareholders are going to be screaming. They have been kind of given the short end of the stick, but the writing has been on the wall for a while.
Vishy?
Yeah, so as Mr. Tandon was pointing out, of course, the writing has been there on the wall for a while. I mean, we've seen the boardroom drama sort of play out at Lakshmi Vilas Bank only just a couple of months ago. It was, in fact, in September, when 7 directors from the board had to step down, including the MD and CEO of the bank, S. Sundar. This was because a host of certain large institutional investors in the bank were against the reappointment of these directors. This had led to a lot of strife within the board of the bank, of course, and the RBI had to step in at that point in time. And the RBI created a committee of 3 directors and said that they will be executing or conducting duties of the CEO till the point in time that the deal with the Clicks Capital fructifies. And once that is done, then of course a new management and a new proper board can come into place. That deal again, the Clicks Capital deal, first it was announced many months ago. I think it was in June or July when the announcement had come. After that, Clicks Capital has been conducting its own due diligence for a very long time. Then finally in October they submitted the non-binding offer for Lakshmi Vilas Bank. That again went into multiple discussions. There was no real breakthrough that was achieved with respect to that specific deal. Even when the July-September results were being announced at Lakshmi Vilas Bank, the board had said that, or the 3 directors on the board had said that they are continuing the discussions. They are in advanced stages, but nothing has been announced as of yet. At that point in time, they also said that they'll raise 500 crore from the market through a private placement, and thereby maintain the capital adequacy of the bank, including the auditors of the bank, who had said that the status of the bank may not continue for a very long time as a running entity. That the capital adequacy poses a serious problem for the bank to continue as a going concern. These were all remarks that were made by the auditors. So it's not that the problems are fresh or something that has suddenly come out. Like in the case of Yes Bank, overnight, a lot of the serious problems were being brought out by the RBI. But the problems with Lakshmi Vilas Bank have been at that level for a while now.
All right.
Menaka,
Mr. Parekh, what should be the next step? Sorry, go ahead.
Sorry,
Amit.
I just recalled that even when Yes Bank had the final stages before RBI actually intervened there was the fact that DBS was being spoken about as one of the possible suitors. So I'm guessing that, it was an easy call for RBI to make, saying that, look, that one's not there, but this one is on the block now. Do you want to step in? So, but it's merely speculation on my part. Just trying.
Two very different assets in terms of qualities, Yes Bank and LVB.
Sure.
But nonetheless, yeah. But I get your point. Maybe they were the only ones in the ring. Maybe nobody else was interested at this point in time. And maybe, as both you and Mr. Parekh have pointed out, this opens the door to all kinds of interesting structures in the next few years to come when it comes to strategic investments in banks. But before I get to that, just so that depositors, and all other stakeholders understand, what would the next steps in this process be, Mr. Parekh?
Yeah, so I mean, in the normal course, in all these amalgamation schemes, and the RBI will soon announce, they said 30 days, they'll soon announce the exact scheme, which means for the deposit holders, the sort of when the bank starts becoming functional and they can really withdraw their deposits if they wish to, that's something that also will get clarified along with the entire scheme, because as we know, the entire moratorium has been imposed by the regulator for the purpose of protecting the interest of the deposit holders. So that would be first on their mind and first on their scheme announcement as well. So that's the deposit holders part. As far as the business is concerned, so considering that sort of the board is in a bit of a let's say state at this point in time, this executive management also is into a bit of a flux at this point in time. I would say the scheme, I wouldn't be surprised if the scheme says that the DBIL management will step in the earliest and they'll start taking the control of the bank sooner. So, issues such as what entity will it continue as, whether it will continue as Lakshmi Vilas are all matter of detail, I suppose. It can still become a DBIL because after all, it's an Indian subsidiary. It's an Indian entity. It's an Indian entity under the Indian Companies Act. So therefore, that's only a matter of detail, but the sooner it becomes functional, the more the comfort it offers to the deposit holders is what we would expect from the amalgamation scheme, I would say.
Are you surprised, Mr. Parekh, by the complete writing down of equity?
Not really. I must admit that, there aren't many cases of this nature. But then, of course, if you go through even the Companies Act, let's say the Indian Companies Act, for instance, the last in the line is the shareholder. Basically, after the settlement. And in this particular case, in case of banking regulations, when the net worth is zero, then of course, the shareholders cannot really expect anything. So I'm not too surprised. Had it been done, let's say, purely on a commercial basis as well, I'm sure that the new buyer wouldn't have really given anything to the shareholders, or like in case of a Global Trust Bank, they could have said after 12 years, if there is any excess surplus that's available, then Oriental Bank of Commerce could have perhaps considered something like that. So that is a bit of neither here nor there. It's clear in this scheme that there is absolutely no consideration for shareholders. It's the value is struck down because it was an insolvent, as Amit said. It's an insolvent entity, actually,
You don't expect the two banks to be merged or amalgamated, because you're still referring to Lakshmi Vilas Bank as potentially being a subsidiary of DBS India once the amalgamation is through.
No.
Would it not be that the operations would get merged?
No. I'm very clear in my mind. It's going to be a merger, and therefore it's going to be a clear amalgamation. It's going to be a clear acquisition. So, that's what the scheme suggests. I read the scheme, and that's what it is suggesting at this point in time, unless, of course, there is some more detail to it. But, a bank holding, that a wholly owned bank subsidiary as a structure, holding a subsidiary Indian bank is, I don't think that's a little far-fetched to my mind. The legal structure is something which I don't think has been ever attempted in the past. No bank is ever a subsidiary of another bank. I mean, so I can't really expect that. It has to be amalgamated. I mean, that's the way I would look at it.
Yeah, sorry, I just got a little confused with some of the wording. You also made a point right up front that Amit endorsed, Mr. Parekh, which is that this opens the door to interesting foreign strategic investment in Indian banking, or a review of the regulations, so to speak. Can you talk us through what you think are the opportunities that open up?
Oh, they're substantial. See, I'll tell you, if you look at the whole thought process, the thought process perhaps began after the global financial crisis. The Indian banking, when it needed a lot of capital, wanted to really find where it would really get the capital from. I mean, we all agree that 70 or 72% of the Indian banking is public sector banking, where the shareholding or the capital comes from the government. With the government having its own limitations in putting more and more capital, there was a talk. I mean, it began about a year ago, a couple of years ago, whether some of the public sector banks also can be privatized. That's one thought. The second is, in case of some of the Indian private sector banks, to really get more capital, whether there would be, I mean, after a new set of framework of fit and proper, there would be more sort of kind of or classes of, let's say, shareholders who could be admitted as shareholders of Indian banking companies. And to that extent, the government, I mean, from all the public announcements that I have seen, has always been of the view that let that capital come from foreign banks or foreign entities. Whereas the RBI was always holding a view that foreign entities normally, do not, I mean, when they find a problem, they sort of, try and wind up faster, or they try and get the maximum value and then they run away. So, I mean, the stability of capital is the point I'm trying to make. And I think that between the government and the regulators, there has always been a bit of sort of dialogue, Now, this time around, we are talking of Singapore. We are talking about a bank which is sort of, foreign bank, of course, but with a different kind of structure, let's say. So it does open up for the regulator. I mean, first time you're getting a sense that foreign banks, maybe there may be classifications of these such foreign banks who may be acceptable to the regulator. And wisely it has to do it. It cannot just throw open the doors of Indian banking system to some of these entities, particularly, let's say, funds who are totally interested in financial kind of investments and were not there to stay for a longer period. I suppose from the capital stability point of view, examining some of these foreign different kinds of or classifications of investors would be a very interesting experience. I mean, I would certainly say. It does open up a completely new set of avenues, sort of both for the government and for the regulator now.
Okay.
First, I'll start with Tandon. There is a serious problem with the Lakshmi Vilas Bank's asset quality issues. It has about 25%. About a quarter of the book is classified as a gross non-performing asset. It's not like DBS India has a very large book or has any long history of being a resolution-oriented bank. In fact, it is an SME-focused bank, and a lot of Lakshmi Vilas Bank's problems, as we have pointed out in our past stories, is related to mid-corporate, which is slightly larger than the MSME segment. How does a bank which does not have history with these asset quality problems come in and try and resolve this? I mean, I looked at the capital position of the merged entity, and it's not like it is higher than the minimum requirement, but it is still not very high that it can give complete confidence that the bank will be able to fully provide against any of these problems. Mr. Tandon, this question is for you.
Yeah, look, Ashwin would be able to give you a better or a neater answer to this. But the way I see it is that for any of these entities, what you want is to address the liability side. And what this acquisition lets DBS do is address the liability side. On the balance sheet, on the asset side, of course, they would be able to have tighter underwriting standards. One of the issues with the bank would have been the fact that there was a lot of community-based lending, and there were charges of the fact that there were a set of directors who had been ensuring that they kind of control who the credit is flowing to. And therefore that was where a lot of the problems were originating. We also need to remember the fact that, look, while the NPL levels are high, there have been some provisions which are made, and the fact that the bank is going to be bringing in about close to 2,500 crores as it gets started. So therefore, one would expect that they will be able to begin from a relatively clean slate as they move forward. And again, as I said in my opening comments, the fact that DBS as a bank is focused on MSMEs and the sector, and not just something which they decided to do in India, but as a strategy, they've done it from different Asian countries. They should be able to bring in some of those underwriting skills and some of those ways of viewing businesses into the Indian market and be able to grow their book. It's a relatively small book. It's not that it's large. It's relatively small compared to DBS's global size. So it's not something which is going to give them a great deal of stress. It's something which they should be able to absorb and move forward with.
Right. Mr. Parekh, same point to you. I mean, with a lot of these South Indian banks, I won't say South Indian, but a lot of these old generation private sector banks, there has been this problem of a cultural clash. This happened with Dhanlakshmi as well. A new management tried to come in and change things rapidly. It faced a lot of opposition from the existing, people, the people who work in the bank right now. This culture shift will become a problem with Lakshmi Vilas as well. I mean, they've been around for 93 years. They're a largely South-focused bank.
See, I mean, let me put my thoughts together. I mean, your question itself, in some form, is answering your question. What is the issue? What is the real issue? Is the governance. Vishwanath. I mean, if there is a proper order of governance, let's say, and if there is a proper direction in which the bank is prepared to really grow and move, then to that extent, the management always follows. I mean, if you look at the example of all foreign banks in India, for that matter, once they provide a certain, let's say, governance and risk management framework, then you always have sort of, domestic Indian bankers. I mean, professionals who get selected in the normal course of, I mean, by virtue of their expertise and their strengths, and then they run the bank. I mean, seldom do you come across a foreign bank where you have more than even, I mean, 0.5% or even less than that of foreign, let's say, expatriates sort of working on the bank. So if I have to answer your question, with proper risk management framework, with proper capital management framework, and with a high order of governance, I'm sure, very clear, that the management will rally around. I mean, after all, at the end of it, I think people will normally follow the purpose. If there is a sound purpose, if there is a sound direction that the bank is going to follow, and with a name like DBS, you can, I mean, rest be assured, I mean, that they will certainly have all of this. I mean, good order of governance to begin with, good professionals to run the bank, and a good salary structure as well. I mean, why not? I mean, at the end of it, these ingredients, I think, may play out well in favor of this entity, sort of, So to that extent, I would say the deposit holders are fortunate, that they're getting at least sort of a robust name, I mean, that really will protect their deposits, I mean, up to such time as they are allowed to withdraw, if they wish to withdraw, sort of,
All right, back to you, Menaka.
I have just one last question for both our guests, Rishi, and it's not a question that a deep dive banking journalist would ask, but it's a broader question. I think we've looked at so much depositor anguish in the last year and a half, first with, PMS, Yes Bank. PMS still continues, it persists. Yes Bank, of course, then finally did get resolved. Now for the next 30 days, Lakshmi Vilas Bank depositors, will be facing severe restrictions. These rescues that we're speaking of, the 81 controversy in the Yes Bank situation, this equity situation that is likely to become a controversy, however right it is from a credit hierarchy point of view. I just want to, what does this say about the health of India's banking system, especially if you move away from the top 5 or top 3 now private sector banks and a few of the stronger public sector banks? Amit, I'll put that question to you first and then give the last word to Ashvin Parekh.
Well, Menaka, my view is that India has too few banks. If you kind of said there are about 5 or 7, I said if you kind of aggregate them, there won't be more than about 12 or 15 banks which can, of any meaningful scale or size, which will be able to help us grow. When we kind of talk about India being a $5 trillion economy, we really don't have the kind of banking system which supports it, and therefore that's a serious area. It's an area of great concern that we need to focus on the fact we need many, many more banks. And partly it comes, if I may say, out of the fact that regulations have been a little bit tight. They've been a nanny, you know, trying to smolder what is happening and trying to manage it to the second or third decimal point. And therefore the flexibility which some of the banks need, which some of the system needs to be able to, the moment it sees a crisis, it's being able to kind of bounce back is not there, because at every stage you're kind of turning to towards the regulator to see what is going on. So I think while I understand the need to kind of protect depositors and to kind of marshal the system in the way you want, I think we have been overprotective, and that is one of the issues which is now kind of rearing its head at this stage.
Well, I wonder if we've been
That's
overprotective
how.
or poorly supervised in that sense. I'll take this question to you, Mr. Parekh. I don't know I can't remember if in my journalistic career, 3 banks have had this kind of severe trouble in the period of just 1 year.
Yeah, so see, I'll tell you, I think it all goes back to the economy, I suppose. I mean, been always optimistic about the Indian banking, quite honestly. I do believe that there is enough of depth and management capability in the Indian banking system. And I have complete faith and trust in, the regulator in terms of what he's doing is perhaps, the way it should be, because 70 to 75% of Indian banking is public sector banking. So to that extent, some amount of handholding is really not out of place. But I would say certainly that Indian banking could start looking up if the economy certainly starts performing. So it's not the regulator. I think it goes back to the government. It goes back to the economy. That's the first observation. I do agree with Amit, however, that I suppose this over sort of involvement has given a certain sense to the deposit holders, that they should not be looking at the bank per se, but they should eventually be looking at the regulator and the government. And that in itself is a little sort of, a dangerous trend. I mean, PMC we saw that the deposit holders start sort of, expecting the regulator to step in, expect the government to bring in the capital. Now, these are some of the trends that need to be properly explained. They need to be properly, which really means that the regulator will have to come out with a framework where they clearly allow a certain order of independence, and a certain order of governance. I think governance, Dr. PJ Nair committee has really done a remarkable work. Somehow the other governments after governments, both the governments have shied away from, accepting some of those recommendations. Out of 82 recommendations, some 7-8 recommendations have been attempted, not even implemented, quite honestly. BBB is one example, and there are several examples. I suppose strengthening the management and strengthening governance is the answer, but I'm still optimistic about Indian banking, to conclude, Menaka.
All right, we'll leave it on that note. 3 banks in 1 year. Thank you, gentlemen, for joining us this evening. I'm sure we'll all go back to the fine print of that draft scheme of amalgamation to see what else we can find out. And it's going to be a slightly anxious morning for many Lakshmi Vilas Bank shareholders tomorrow morning. We get the credit hierarchy, but 93% of that bank's shares are owned by public shareholders, including several institutional shareholders. And as of tomorrow morning, that paper is going to be worth nothing. So we'll see how that plays out. Vishy, of course, thanks always for joining us. And that's it from us here on BloombergQuint on this important developing news this evening. Stay tuned to our website for more information.